Suddenly, once despised Intel stock is the toast of the town. At least two analysts raised their price targets on Intel stock after the company's recent tech product webinar. It's encouraging that Intel's data center chips will be delivered sooner than expected. Investors should buy Intel stock while it's still far below its all-time high. Let's dive in. Here's why you should invest $1,000 in Intel stock now. Welcome to Timely Investment Research. Microprocessor manufacturer Intel is back in favor after a prolonged period in the Wall Street doghouse. Today is a great day to bet $1,000 on Intel stock as Intel continues to remind investors of its drive to bring top-tier tech components to the market. 2022 and early 2023 were tough times for Intel and its stakeholders. Advanced Micro Devices stole market share from Intel, while inflation and interest rate hikes generally wreaked havoc on chip stocks. However, it appears that Intel is finally having its turnaround moment. As Intel reasserts itself in a competitive microprocessor market, enterprising investors should consider taking a reasonably sized share position for the long term. What's happening with Intel stock? Intel stock once traded at around $69, but competition from Advanced Micro Devices and other factors brought it down to $25 for a hot minute. A recovery seems to be in progress, though. Not long ago, traders pushed the Intel share price above $30 and market sentiment suddenly favored the once despised chipmaker. What turned the tide? Perhaps it was the company's recent webinar for Intel's Data Center and Artificial Intelligence business unit. The Data Center and Artificial Intelligence webinar showcased a range of Intel processors, with fancy names like Emerald Rapids and Sierra Forest. There's no need to delve into the tech-chic details here. Just suffice it to say that Wall Street was duly impressed. Soon after the Data Center and Artificial Intelligence webinar, Raymond James analyst Srini Pajjuri raised his price target on Intel stock from $33 to $35. Also, Deutsche Bank analyst Ross Seymour lifted his price target on Intel shares from $28 to $32. Intel is on track with data center processor release. Clearly, some analysts are increasingly bullish on Intel in the wake of the Data Center and Artificial Intelligence webinar. Yet, that's not the only development that Wall Street's experts are talking about. Just recently, Intel announced, per Reuters, that its data center semiconductor, Sierra Forest, will be delivered in the first half of 2024. This release timeframe, according to Bloomberg, is earlier than expected. You might expect Wall Street to be unanimously optimistic about this development. However, interestingly enough, some analysts aren't too impressed. For example, Oppenheimer analyst Rick Schaefer remains on the sidelines about Intel, while KeyBank analyst John Finn awaits further proof points on Intel's ability to close the performance gap and regain market share versus Advanced Micro Devices. The skepticism is duly noted as Intel is still a show-me story. That said, I remain encouraged by Intel's timely update on its upcoming data center processor. It's a great time to wager $1,000 on Intel stock. Intel has a long road ahead of it. The company has to demonstrate that it can compete successfully against fierce competitors like Advanced Micro Devices. On the other hand, the Data Center and Artificial Intelligence webinar reminded investors that Intel hasn't lost its drive to innovate. Ultimately, it's possible but not guaranteed that Intel stock will revisit the $70 area at some point. Therefore, a moderately sized share position in Intel, say $1,000, is perfect right now for a confident buy and hold strategy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.